Happy holidays, everyone. Good morning. It's a holiday, but we still do business. We're doing 55 minutes of current and relevant business conversations here on Business Morning. And I'm Ini John Mekwa, and I'm glad to be at work, even though I guess you are at home at this time. But we'll start business from where we normally do, which is oil prices. We saw it steady today after falling more than 2% in the previous session as investors are assessing the impact of harsher U.S. secondary sanctions against Iran. So for this morning, we saw that Brent dropped almost 1%, 0.90% at $91.34, while WTI, that's the West Texas Intermediate Crude, that also dropped 0.95% at $84.21 a barrel. Both contracts fell more than 2% yesterday, with U.S. crude oil falling to a one-week low. That's WTI on profit-taking after prices rallied over the previous 2 weeks. U.S. Treasury Secretary Scott Bessent has unveiled an expansion of sanctions to cut off Iran's economic lifeline to force an end to the war between them, telling countries that they would need to sever their business ties or risk being cut out of the dollar-based financial system. And driving that back here at home, the Nigerian National Petroleum Company Limited, that's the NNPCL, and its partners, they are moving ahead with a $21 billion Bonga offshore project. The project, located in oil mining lease 118, is expected to become one of Nigeria's biggest new deep-water developments, with a projected peak production of about 175,000 barrels of oil per day and 140 million standard cubic feet of gas every day. The latest development signals fresh momentum for the long-delayed project, which is also expected to support government revenue and strengthen Nigeria's energy supply. Unlike onshore and shallow water operations, deep water projects require huge upfront capital and long-term fiscal certainty, making the competitiveness of a country's tax and commercial framework a major consideration for international investors. And still around oil and gas in Nigeria, imports, petrol imports, that is, into Nigeria, that has gone up again. Supplies from local refineries have declined. This is according to the Nigerian Midstream and Downstream Petroleum Regulatory Authority, the NNPCL. Latest statistics on Nigeria's midstream and downstream petroleum operations for July 2026 shows that domestic petrol supply fell by 21% within 1 month, while supply imports, that's petrol, that went up 9%. However, the emergence and expansion of private refining capacity led by Dangote Petroleum Refinery, as well as efforts to rehabilitate government-owned plants, have begun to alter the country's petroleum supply structure. The trend raises questions about the ability of local refineries to consistently meet domestic fuel demand and reduce the country's reliance on imports. And then we go to the markets now. The markets are closed today. That's the capital market. Closed today in Nigeria and most countries. Yesterday we saw a continuation in the negative trend. Negative sentiment dominated the markets, and the all-share index dropped 0.11%, retaining the 239,000 level, and equity, that's the market cap, 154.377 trillion naira. For the activity, we saw volume at 627 million, value 21.80 billion, and deals at 44,675. We saw top gainers yesterday, Sunu Ashore, UPL, and HM Core. On the flip side, that's the losers. We saw Lotus Shore, Intergens, and Nemeth. Then top trades had FTG, Insure, UBA, and First Oil Core, most of them experiencing a level of profit taking. Now, the Central Bank of Nigeria updated its policy on August 12, and is supposed to allow retail investors, including individuals, corporate bodies, and non-bank financial institutions, to directly participate in open market operations, that's OMO, the bill auctions. And let's look at the key details of that, talking about that, the changes coming to OMO auction and those who can participate in it. So we see, if we would see more of that screen now, that the changes bring more people to the table. OMO bills are no longer restricted exclusively to banks and foreign institutional investors. Eligible local investors can now submit bids and buy these instruments through local commercial deposit money banks. And this change rolls back restriction. I think the restriction is said to be about 7 years old, blocked ordinary retail participation in OMO, and then recent OMO stop rates have hovered around 20% to 20.4, drawing massive interest and competition away from equities. So let's draw this home, and I know that Will did settle on this on capital markets on Saturday, but just in case you missed that, let's give more light to the changes. Perhaps this is where you're going to, through this, you might join the Dollar Millionaire Club, which we discussed last week. We have the Managing Director of Optimum Global, Dr. Anosi Ikimalu, joins us right here in the studio. Dr. Ikimalu, do step in. Good morning. Welcome to the program.
Good morning.
Yeah, so these are the changes brought about for the participation of OMO, and I guess it just opens the door for more people, retail investors, not just the banks or institutional investors. I think that's the biggest thing that comes out of this, yeah.
Yes, but also too, something else as well. They also reduced the restrictions on banks and how they can participate. Before, the banks could only participate in the discount window if they weren't participating in FX auctions or treasury bill auctions. So the CBN also removed that restriction. That's also another key change in the policy that they actually.
So what does that do to the banks? Does it allow them to put in more money in the OMO auction, or what? So
it actually increases the liquidity management tools that the central bank can use. So allowing retail investors and non-bank financials to participate in OMO bills widens the net in which the CBN can use OMO to actually reduce or manage liquidity in the system. And removing the restriction on banks being able to participate in, foreign exchange market or primary government auctions also helps to, improve the liquidity management that, these banks could actually use to manage their liquidity and participate in markets.
So let me just ask, do you think perhaps the motivation for this is that there's still excess liquidity? Does this sound like that's what CBN is trying to do with this, or is it just about time to broaden the net for participation?
I think it's about time, because it's clear that there's a lot of liquidity that moves through non-bank financial institutions as well as the broader market. And with the election season coming up, broadening this space could help to actually control money supply much more efficiently or effectively, than just limiting it to just the banks.
Do you think political money can find its way to OMO bills?
Well, I wouldn't say...
Because, there's the fear of inflation from political spending.
Exactly.
That is real. I mean, from experience over time.
Yes.
So do you think that this could perhaps...
Yes, certainly. I think that... some of that election spending, that increased spending from election could find its way, into OMO bills now that the net has been broadened in that sense.
So tell us, I am an individual. With this now, I can participate in OMO auctions.
Exactly.
What should I do? What do I need to have? How do I go about it?
So for investors like yourself and I, this just increases the number of instruments that we can invest in. So it broadens our investment horizon. And you can participate the same way you'd participate in treasury bills. You approach your deposit money bank and tell them you want to bid at an OMO auction when the OMO auctions are available. And you place your bid, and if you're successful, you get allocated the bills.
What do you mean you place your bid? How does that work?
So it works the same way the treasury bill auction works. You place bid at a rate, so it could be 20% or 19%, and if it gets filled at that rate, you get allocated your...
So you can't do this through the app, because for a lot of people, transactions for capital markets is on apps now.
Well, some fintechs, I'm sure innovation was probably going to get us there. But at the moment, it's probably going to be through your deposit money bank.
You have to go through a bank.
You have to go through
a commercial bank.
A commercial bank, to be very specific.
Okay.
Because they are the primary, people who can bid on your behalf.
And then when you talk about the amount, I know normally when you have the FGM bonds, they tell you, I think it's at least 1,000 naira or something, or in multiples of 1,000. So do we have anything like that, or is it going to come with every auction? I know they do release their calendar for
exactly. So at the auctions, the bank through which you are participating would advise on what the minimum would be.
Okay. Does it mean that what about foreign investors? Are they in the loop here?
Yeah, so they have always been, it was restricted to banks and foreign investors before. So this is just broadening it. So they can still participate. It doesn't remove their participation eligibility. Yeah.
Better yields or just the same? Doesn't make any difference, yeah? For the yields?
Well,
just the way it's always been?
Well, on the yield side, so these are the stop rates. So yields are slightly higher than that.
Because we see yields are dropping now.
Well, actually, yields have been increasing on the Treasury bill end. So there is probably going to be...
What about the federal government bond?
On the federal government bond, those are more long-term bonds or long-term instruments, so you wouldn't compare to OMOs. OMOs are pretty much similar.
I think this is maximum of a year, 365 years?
Yes, it's maximum of a year, but most of the time, CBN's bills are usually even much shorter than that.
Like
or in recent times. You're looking at 90 days, from anywhere from 7 days to about 90 days. And what we're seeing is potentially a convergence as T-bills coming up and probably OMO bills as well coming a bit down. Probably converge somewhere in between where, those two are today.
Does it pull the fixed income investor one way or the other?
So when you say pull, do you mean pull higher or pull lower?
Pulled into participation.
Okay, so participation.
So you have the FGM bonds, you have the OMO,
and you have the
Treasury.
Bills,
yeah.
Yes.
So does it pull them?
So I think it's more around competition with Treasury bills.
Okay, so OMO and Treasury.
Yes, because bonds are long-term.
Long-term, okay. Long-term. So the target is different.
It's different, yes. So OMO and Treasury bills, so there would be a pool there. Do you participate in OMO or do you participate in Treasury bills?
And the yields are coming closer. The yields, they're coming...
The yields would eventually converge to somewhere around the same range.
So this should help mop up a bit more liquidity, especially as we expect liquidity from.
Exactly.
Does it have any exchange implication?
So on the exchange rates, well, there could be, but we'll be cautious to make that sort of inference just too quickly.
Okay, all right. Thank you for helping us understand this.
Thank you.
So we expect more participation now that the curtains have been torn down.
Yeah.
Managing Director, Optimum Global, Dr. Anosi Kimalu, thank you for your time.
Thank you very much.
All right, now looking at other issues now, Nigeria's foreign exchange reserve, that has risen by about $7 billion in the first 8 months of this year, and that signals stronger external liquidity. Increase gives the central bank more room to support the foreign exchange market and strengthen investor confidence. A stronger external position has come alongside improved conditions in the foreign exchange market. Now, they say the reserve growth reflects stronger dollar earnings and improved capital inflows. Meanwhile, the CBN maintained its tight monetary policy. We saw that in July. The rise also comes as Nigeria continues to benefit from improved foreign exchange inflows and higher oil-related receipts. Nigeria's pension industry continues to expand, with the National Pension Commission, that's PENCOM, recording 11.18 million registered pension contributors in the first quarter of this year. This is according to PENCOM's Q1 2026 report. Cumulative RSA registrations grew by 143,248 accounts during the 3 months, up from 11,040 recorded, or I beg your pardon, more than 11 million recorded at the close of the fourth quarter of 2025, highlighting the momentum in account openings. During the period, the Commission states that quarterly cadence is materially stronger than the 114,000 opened in the fourth quarter of last year. And this reflects both improved digital onboarding and sustained public sensitization. And well, you are probably at home, and of course, when you are home and the festive season or festive mood is on, then there's more eating. So we decided to do a bit of comparison, looking at the price of some basic commodities that may be very attractive at this time. Comparing year on year, we look at headline inflation. So for headline inflation, we see for 2025, this time last year, headline inflation was 20.12. And then for this year, 2026, we see it has gone down to 15.43%. And you say, oh, these are just in numbers. Don't worry, we'll get there. Food inflation was 21.87% last year, this time last year. For now, it's 20.31%. So it's just a slight difference there. So food inflation, we've all agreed even before now, is still a major challenge for the country. So let's look at some of the things you might be eating at this time. One of that is cow. So we checked the price of an average size cow. This time last year, the cow was about 650,000 to 1 million naira for an average size cow. But now it's gone down to, well, slightly down from 500,000, between 500,000 and 1 million naira. So what's the difference? Of course, it's just the entry point of 650 for last year and 500 for this year. Let's see others. A kg of chicken. Last year, about this time, it was between 4,500 and 5,500. But now you get it for about 5,500, from about 5,000 to 7,500, between that, depending on where you're buying from. So it's increased, even though inflation is lower compared to last year. A bag of 50 kg bag of rice last year was between 75,000 and 85,000. Now it's gone down, maximum of 80,000 when you look at it. Depending on if it's the imported one, the ones with stones, or the local ones that have been dealt with. So you have this price range for that bag of rice. And once again, we see a bit of drop there, but not so much. Then tomatoes, a basket of tomatoes, an average one. Last year, about this time, it was between 15,000 and 30,000. Now, you get it for between 25,000 and 40,000. That has gone higher. And remember when the inflation numbers came out, and then food inflation is still a high one. So even though you're at home, and we do thank God that we do have a holiday where we can rest, but you know, it does look like there's a whole lot that needs to be done when it comes to food, especially. And it's almost everyone has agreed. Inflation is structural. So issues around security, logistics, infrastructure are driving this. So even though we see the headline inflation reduced, trickling it down to what the basic needs of Nigerians, food top on the list, we see that we have missed out of that reduction. Now to other issues. Now Nigeria is set to get a fresh injection of capital from critical infrastructure and climate resilience projects with the launch of a $150 million infrastructure climate resilience fund. The fund, a partnership between Africa Finance Corporation through AFC Capital Partners and United Capital will mobilize capital from Nigerian institutional investors to back high-impact infrastructure projects. The signing ceremony, which was in Lagos, brought together the partners and key stakeholders behind the initiative.
It may look like just another small meeting room, but the deal being signed here is far from small. A $150 million fund to finance climate-resilient infrastructure across Nigeria and Africa. The Infrastructure Climate Resilient Fund, ICRF Nigeria, brings together Africa Finance Corporation, AFC Capital Partners Nigeria Limited, and United Capital PLC with a clear objective: turning domestic long-term capital into infrastructure investment.
ICRF Nigeria is an infrastructure fund that is dedicated specifically to mobilizing capital from Nigerian institutional investors and then channeling the capital into climate resilient infrastructure, which primarily means infrastructure assets that are able to withstand climate shocks, as we now see evolving climate scenarios on the African continent and also in Nigeria.
For the Africa Finance Corporation, the question is not just about how much money can be raised, but where it can make the biggest difference.
So as this fund invests in resilient transport infrastructure, over time, Nigerians will benefit from lower cost of transportation, and obviously our partners that have invested in this fund will also make money.
The fund will target renewable energy, transport and logistics, digital infrastructure and industrial development, with climate resilience built into the projects from the start.
But the unique thing about ICRF, right, is that it has the climate resilience factor embedded in the infrastructure. So the fund is not just targeted to invest in infrastructure or to close infrastructure gap, but to make the infrastructure climate resilience. And this is the unique selling point for the ICRF.
And there is a particularly important source of capital in the equation: Nigeria's institutional investors. Pension funds and other long-term investors control a growing pool of domestic capital, money that could help close the gap in financing critical infrastructure.
The pool of investment funds in Nigeria, especially from pension funds, estimated at 31 to 32 trillion naira as at 2026. We expect that this will continue to grow, and for this fund that's been raised by this sponsored by AFC Capital Partners, $150 million is just a drop in the ocean in this amount.
The ambition then is bigger than raising $150 million. It is about putting Africa's long-term savings to work on the infrastructure it will need for the long term.
Yeah, well, I'm happy when I heard there that soon Nigerians can expect to get lower costs when it comes to transportation, and I hope that becomes a reality soon. Let's take a break now. When we come back, we'll be settling on that issue of infrastructure and what the federal government has proposed to do, started doing. That will be our conversation after the break. Please stay with us. Welcome back. You're still watching Business Morning here on Channels Television. Well, last week, the Federal Executive Council approved 438 billion naira for nationwide road construction, rehabilitation, and public-private partnership concessions. The approvals include concessions for trailer parks, highways under PPP arrangement. We have heard of concessions before. We have heard of tax credits before to improve infrastructure in the country. Let's see if we should expect a lot from this. You know, a lot of times, even after the government's pronouncements and assurances, Nigerians are very skeptical, putting their faith in that. So we have joining us in the studio the Group Managing Director of Capital Bank Corp PLC, Mr. Gbolahan Olojede. Mr. Olojede, good morning. Welcome to the program.
Yeah, thank you. Nice to be here.
Good to have you. So, 438 billion concession. It's supposed to be a PPP, and we have gotten excited about PPP before, but that excitement has died down. So when you hear this announcement now, what do you think?
Well, I think I had my fears during the previous administration when the then Minister of Works was working on some PPP initiatives that were called, I think, Highway Maintenance and Development Initiative then. And it was a well-structured start. There were professionals that were hired. I think KPMG was on that deal to help us get some numbers. And there were, engagements with the Commission for Infrastructure Concessioning, and all of that was going on. My fear then was that when he leaves, will it continue? The reality, which is part of the cocktail of problem we have on the table today, is that the government cannot finance our road infrastructure. At least not all of them. Of course, government must take a big bite, but it is not enough. You can imagine the reality that we must fix old roads, but apart from fixing old roads, we must also construct new ones. Where is the money? So the public-private partnership brings to the table not only the private sector management capacity, it also brings capital to the table. And the financing part and management can be handed over to private sector under a well-structured, because you know where we fail most of the times, it's not in the fanciful ideas or great ideas, let me say, it's when it comes to implementing those ideas. Our people are disillusioned about failed public-private partnership. And if we do it right, PPP in itself is not the problem. The reality is that if we do it well, we will get the benefit of what we're trying to do.
Yeah, a lot of ifs there. And of course, I don't blame you because we have a history,
Correct.
PPP, and everybody says that's the way to go. There's no way that government can fund all the infrastructural need that we have, even though we've heard a lot of borrowings that are connected to infrastructural development. But it does seem like it's difficult to actually trace it after the loans have been gotten, to trace it to a project. Or maybe I've missed out.
Well, it shouldn't start from trying to trace it after the loans have been gotten. Where it starts is, what is the loan for? So when you're procuring a loan, there must be a purpose. So if the purpose is for roads, then we have an obligation. The arms of government with oversight function have an obligation. Civil society organizations have obligations, and there are other ways of checking.
What about citizens?
And citizens asking questions.
Do we ask enough questions in Nigeria?
I'm not so sure. I think we get carried away by the hypes. And honestly, what a smart politician would do is that if we're asking too much question, they would throw a distraction in the middle. I know for a couple of weeks in this country, we're talking about snakes that swallowed money in the midst of very serious challenges. So that's a very nice distraction for people to chew on, instead of maintaining the momentum on asking some relevant questions.
So I guess, before we head back to our main conversation, dealing with that takes a lot of public enlightenment. But then who would do that when the government themselves, controlling a lot of instruments, are the ones who will lose out if you have an enlightened citizen?
I don't believe it's against the interests of the government to have enlightened citizens. I believe it actually supports what they are doing. It supports them to be able to deliver better.
But the people will question more.
They will.
And be more critical.
Yes, they will. But so unless the government itself is not trying to do the best for the people, what the government will say is that they are trying to do the best for the people, then you shouldn't be afraid. See, in that previous minister's model, for example, he had actually started engaging with the public. So the public must be engaged with. Transparency is an established factor for successful PPPs. Where PPPs are not transparent, they don't succeed much. But where the people are carried along, where they see the need for what they are being asked to buy into, PPP tend to succeed.
So how would you rate when you talk about PPP We know Minister David Umahi is very vocal, is very in your face, especially because of the Calabar Coastal Road.
Yeah.
Both positively and negatively.
And negatively.
Yeah. So how would you rate this current administration's approach when it comes to PPP? Now they have approved this money, 438 billion for concessions. They also had the tax credits program where we saw some corporates take on some roles.
Correct.
You know, and all of that. But I think that's been suspended.
Well, I'm not so sure, but it will be unfortunate if it's suspended.
I think I had something
because
that, but anyways.
it has delivered major infrastructure projects in this country.
Yeah, we have seen that, and that is one success of PPP.
Correct.
So when you look at this administration as a whole, we're talking of infrastructure now, how would you rate their approach to PPP and infrastructural development? I mean, some days ago, they released how much they have spent so far on major infrastructure, and so just a huge amount of money.
I think the government is quite ambitious, but I believe it needs to do more in the area of transparency. Most people will agree, especially people who have used the Lagos-Calabar Road, for example, the Lagos end of it.
The coastal road.
The coastal road.
Yeah.
Most people will agree that it actually is a very useful road. I have been on it. My office is on Lagos Island. I had a meeting at Ikota. I had another one in the office after 2 hours. I was able to attend my meeting at Ikota, come back to Lagos Island and attend the second meeting, all within 2 hours. You know, so it is delivering value. But where most questions will come from will be, how transparent was that process? The road in his earlier discussion was being discussed as a PPP initiative. Is it a PPP initiative up to today? So the lesson from that is that we can do better with improving transparency around the project. But on the ambitious side, I think the government is quite ambitious. I am from Osun State. The last time I went to Ilesha, I saw that the road construction that was meant to be Ibadan-Ilesha Road, the Ilesha end has already reached the Bonga junction. On one side, they are doing it side by side. The one from the Ibadan end has also gone many kilometers away from where he was the previous period when I applied the road. I see the same thing around the Lagos-Shagam exit onto the Lagos-Benin Road. So, and I learned that the Sokoto-Badagry is also going on. So it appears as if the government is quite ambitious. I am concerned about how it will be able to finance, because it's important that those infrastructure are not abandoned. Will it be able to finance it? So maybe concessioning, because we still need to deal with the road that are existing, even as we deal with the new ones that we are talking about. Will it be able to cope with the financing of this infrastructure?
And I guess financing, you're talking about maintenance, because the issue of maintenance is a big deal in this country. Like, we hardly mention it. I think in some countries, at the inception, the maintenance part of it is part of the contract, you know, and so you see every once in a while or periodically, the roads are something is being done.
Correct.
Not waiting. I mean, right on our end here, we've been crying about the Kara Bridge. I'm sure you noticed
Correct.
it. Everybody tries to use one corner of it because the larger part has is open, yeah, and we've experienced a lot of accidents there. I know the other time when we talked about it, they came and poured some tar or something.
Well, it didn't last.
It can last. It's a very temporal measure, and now we are back there again. Sometimes you almost hit because everybody's trying to go on the side that is good. So, and it speaks mainly to the issue of maintenance. So while we even applaud the Sokoto Road or the coastal Calabar-Lagos Road, is there a plan for maintenance? Or do we have to finish and then start crying for that again?
We have a very poor maintenance culture. We are not deliberate about how maintenance will be done on those existing roads.
I don't think it's mentioned in the contracts.
I am thinking maybe the PPP idea might help. Here is it. Let's say there are 10 roads of the federal government that are being considered. Can we do 2 or 3 first? Concession it under a model such as the HDMI initiative that I spoke about initially, where those concessionaires will be responsible for keeping those roads maintained as part of the entire contract.
Perpetually or for a period?
It's for as long as they are the concessionaires. They must ensure that it is. And then we'll be able to compare those 3 roads with the remaining 7 roads and see if we need to do more or if we need to even yank out what we have given to the 3 people. My view is that if we do it right, we will get value for it. Because what people are concerned about is, if they give it to the private sector,
tolls.
I have to pay tolls. But the truth is that we are paying tolls on bad roads.
And the shocks of your car.
You just don't. If you
and the shocks of your car, the maintenance of your car, it's something.
Yeah. If you spend 2 hours for a journey that should be 1 hour, you have spent toll. You just didn't realize you paid toll. You spent twice the fuel you're supposed to consume. You sat in the position longer than you're supposed to sit. Your car maintenance will wear and tear. Man hours have been wasted. So there is cost to spending too long on the road. If concessioning, at least try with some, can solve part of that problem, we will be making progress.
But this conversation, I don't think I hear them. Maintenance, and even though this concession now, I don't know where we will hear about it again.
The concession will have maintenance as part of it. I can almost bet on that. I mean, we've not seen the detail, but it will have.
It should have.
It should have. But as far as government is concerned, government will always look at when I have budgets or when people complain too much, then I will go to that site and see what I can do.
All right. Thank you so much, Mr. Olojede, for your time. We do hope that we would see and hear of better contracts around the roads. And I mean, it's not just the roads, the rails are there, and all of that. That will help our logistics in the country. The Group Managing Director of Capital Bank of PLC, Mr. Balawo Olojede, thank you for your time.
Thanks for having me.
All right, now let's take a short. Okay, no, we do have a report. The industry's top 50 Nigeria companies of impact. It's an annual authoritative ranking of organizations delivering measurable value to Nigeria's economy and Nigeria's people and the future. It's been in Lagos, and I'm glad to say Channels Television has been, or Channels Media Group in this case, has been captured as one of those top 50 industries. Here's the report.
We will call the great institution.
This is the 2026 edition of the industry newspaper Top 50 Nigerian Companies of Impact unveiling, which held in Lagos. The event is used to recognize companies that have not only weathered macroeconomic storm, but have also invested in the long-term growth of people and communities where they operate.
As media, our job at the industry is to document, to challenge, and to amplify. To tell the stories of Nigerian business with the seriousness they deserve. This supplement, this event, and this list are part of that commitment.
The 2026 list is curated under the theme Building Resilience, Driving Growth, Nigerian Companies Shaping the Next Decade.
Let us build companies that will outlive us. Let us develop people who will become tomorrow's business leaders. Let's allow the structure and system to work. Let our company be driven by structure and not by person.
The keynote speaker, who is the Senior Special Assistant on Digital and New Media to President Bola Tinubu, Otega Ogra, seizes the opportunity to call on Nigerian businesses to key into the export market.
A better operating environment means very little if our ambition and productivity ends at the Nigerian border. Nigeria gives our companies something many businesses elsewhere would envy: a huge, diverse domestic markets for us to learn.
The 2026 top 50 companies include honorees who have demonstrated resilience by adapting to policy changes while delivering on their service despite pressure.
Nigeria is rich in talents, creativity, and entrepreneurial energy. The challenge before us is to convert these energies, these strengths into enduring institutions that can compete globally and outlive individuals.
On behalf of our chairman, Dr. John Momo, and Channels Television, we are proud to be associated with the industry newspaper. And I'm sure that after today, we'll be able to work more collaboratively for the growth of the industry and Nigeria as a whole.
Now, in the fourth year, honorees cut across banking and financial services, energy and oil and gas, manufacturing, FMCG, retail, technology, media, healthcare, logistics, advertising, and a lot more.
And held it.
Well, congratulations to Channels Television and other awardees from that event. We're going global now. We're starting with President Trump. His administration is stepping up pressure on Iran with a new plan to cut the country off the global economy. The Treasury Secretary Scott Bessent says that Operation Economic Outcast, that's what they've called it, that it will target countries and companies that help Iran move money, sell oil, or access international markets. Washington also signals that China will not be exempt, raising the risk of further tensions between the world's two largest economies. The move comes as the U.S.-Iran conflict approaches 6 months, with diplomatic efforts showing little progress. Reacting to that, global sovereign debt market settled into a quiet holding pattern on Tuesday as a pullback in crude oil prices and new potential of cash funding adjustment in Washington has helped cool borrowing costs following weeks of intense duration volatility. The policy-sensitive 2-year yield eased to 2.852%, while the benchmark 10-year bond that inched up 3.249, remaining anchored near multi-year highs. France's 10-year yield that was flat at 4.117, while Italy's 10-year BTP yields similarly stabilized at 4.080. The calm across Europe rates curve follows a tumultuous stretch driven by expanding sovereign deficits and persistent energy inflation, with trading desks taking advantage of a breather in commodity markets to reevaluate central banks' policy paths. The primary driver allowing debt markets to catch their breath as a double dose of geopolitical and technical relief out of Washington. And still reacting to that, European stocks are rebounding. Concerns over the impact of potential Iran sanctions that has started fading. Investors are responding to signs that the threat of broader economic disruption may be less severe than previously feared. The recovery comes as markets continue to assess geopolitical risks and their potential impact on global trade and commodity prices. And still with the United States, they're considering a 7.5% tariff on some Chinese goods over concerns about industrial overcapacity. The move comes ahead of Chinese President Xi Jinping's expected visit as Washington seeks to address trade imbalances while managing tensions with Beijing. The proposed tariff could add to pressure on Chinese exporters and further complicate U.S.-China trade relations. Away from all of that, German gross domestic products, that went up today, 0.3% in the second quarter of 2026 from the previous quarter, beating the 0.2% consensus forecast, driven mainly by export. This is according to the Federal Statistics Office. The reading was below 0.4% growth recorded in the first quarter of 2026, which was itself revised up from an initial estimated 0.3%. The office detailed results showed a second quarter growth was 0.1 percentage points higher than the 0.2% reported in its first release on July 30. And total exports of goods, services, and services rose 2% from the first quarter, led by a 2.6% increase in exports of goods, while imports rose 1.5%. The gross fixed capital formation, that dropped 0.2%, with capital formation in machinery and equipment down 1.4%. Final consumption expenditure rose 0.1%, with both household and government spending up 0.1%. The gross value added rose 0.4% after adjustment for price, seasonal, and calendar effects, with manufacturing up 0.9%. Still around Europe, shares of Air France KLM rose 2% in early Paris trading after Kepler upgraded the airline to hold from reduce, saying the stock has reached its 11.50 euro price target and is now fairly valued. The broker downgraded the airline to reduce after about a month, when it viewed the share price as somewhat ambitious following the start of the Iran crisis. Since then, shares have dropped about 12% and are now in line with Kepler's target price, absent a material escalation in the Iran crisis. And they believe that the current share price accurately reflects the company's business prospects. Lego is reporting record revenue for the first half of the year, supported by strong sales across both premium and more affordable products. The toy maker says consumer demand remains strong despite pressures on household spending in some markets. The performance highlights Lego's ability to attract customers across different price points. And South Korea's leveraged ETF market is seeing a sharp reversal, with investors pulling out about $1 billion as the speculative frenzy loses steam. The outflows come after a major stock market sell-off that has hit retail investors hard, with leveraged products amplifying losses. Regulators have since tightened rules around these high-risk products as investor confidence weakens. And finally, Japan's only high-speed trading firm, Dafama Capital, is moving its operations to Singapore. The relocation underscores the city's growing appeal as a hub for high-frequency and algorithm trading. The move also reflects Singapore's role as a key financial center in Asia, attracting specialist trading firms and global investment businesses. Yeah, you're welcome back. Those were the global stories for now. And of course, the market is closed. Talking about Nigeria's capital market. But But we do have other markets that are trading at this time. And so if you would see for the NGX, you would notice that it's unchanged. Just what it closed with yesterday, 239,085.17 for yesterday. We see gold. Gold is down this morning, 0.07% in the red. Bitcoin is still surging. It's a good time for the crypto community. They're recording some of those gains. We'll hope to be able to touch on that, find out the drivers and if it's sustainable during Business Incorporated later on today. That'll be for the crypto conversation on Business Incorporated at 1:30. But of course, for the NGX, it's closed, as well as some other markets, global markets, being that it's a Muslim holiday. Mostly those Islamic countries will not have their markets open. But we'll see which of them is open and which of them is trading at 1:30. When I'll be back for Business Incorporated. I'm Ini John McMahon. I hope you make the best of this holiday. Rest well. We'll talk at 1:30.